Well, happy Saturday, everyone. Welcome to the Note Show. And we have Alden and Larry here. And in various broadcasts, we've talked it's kind of in passing about different places to hold real estate investing. And I think it can be maybe a little bit confusing because I think people do different things and for different reasons. And maybe Larry, you can start off about why you would want to do such a thing and what you do.
First off, my name is Larry Hoffman. I'm the managing member of LJH Investments. I buy, first mortgages, performing and non-performing across the United States, and I create lucrative deals, giving my funding partners above average returns. And oftentimes, with the funding partners, they're also using their self-directed IRA, which I also do too, as well. I buy these mortgages in and out of my self-directed IRA. And typically, with the IRA, with buying them, you get a lot of tax advantages. So, whether you're just trying to invest within a self-directed IRA, the funds are often earned as tax-free, and or if you're doing a self-directed Roth IRA, they are tax-free. But that's the thing, you have to remember, one way or the other, Uncle Sam's going to get their slice of the pie. So either you're paying now or you're paying later. And it's just really, and that's one of the neat things with the Roth self-directed IRA, where if you're putting it in, because you're using pre-tax dollars, right? So when you get those gains, you don't have to pay taxes on them. When you actually get to pull those out at 59 and a half, and there is no distribution limit, right? That you can pull this out with. And I just absolutely love buying these notes in my self-directed IRA, because like right now I'm 55, and so I'm trying to plan for my retirement, and I'm trying to stuff every little penny that I can within my self-directed IRA. So when I go to retire, and that's the benefit, right? And that's where the Roth comes into play versus the self-directed Roth self-directed IRA versus self-directed IRA, depending on what you think you're going to be at a different tax bracket. And that's why it's vitally important to work with a CPA, a financial planner, or even an attorney, or even like a custodian. There are a lot of custodians out there. They typically don't give you advice, but they can, help you along the lines that help you set your self-directed, either a self-directed IRA or a self-directed Roth IRA up. I mean, it's truly powerful.
That's fabulous.
Yeah, no, I can completely agree. I happened to have a podcast with Nate Hare the other day. He's the executive director of Directed IRA. And you mentioned not all that many directed IRA companies are giving out information. They're really not. They're not trying to educate people. And that's why I like Directed IRA, because on their YouTube, they're doing a lot of education and clarity on why, directing your IRA into an asset-backed strategy and unconventional assets like real estate outside the stock market and like notes. So Nate Hare at Directed IRA has been doing a lot of education, but yeah, Larry, you said it great, to try and defer that tax strategy in an investment platform is truly key nowadays, with, high taxes for the wealthy and things of that nature. I think that it's important to touch on that, you want to be careful at the end of the day in a strategy. And obviously with the direction and directive of your IRA to go out and invest in hard assets that are cash flowing, whether that be by paper of real estate notes or flip, or you're doing hard money lending, that provides that strategy to defer your taxes. And a lot of older investors are probably more aware of that strategy as, a younger individual. I'll be 30 this year. It's interesting to look at the long-term strategy behind directing an IRA and the compounding interest that comes into play, after building that small portfolio of cash flowing assets through a directed IRA. It's cool to see the dynamic of what could happen over a 30-year period. And obviously, I think that there should be more younger individuals jumping into directing your IRA. You are available to do that. Your advisor may not be telling you because they're wanting to trade them on the stocks platform, and you may not even know where your IRA is being invested in. Most people just say stocks. It's important to know those items and where you're investing your money and hedge the market. Additionally, we just saw bloodshed in the stock market, during COVID. Did you have a strategy to mitigate that? Those are all important factors in why directing an IRA and why younger individuals should be entertaining and educating on this program. There's trillions of dollars in IRA accounts. Quote from Nate Hare. And, again, people just say they invest in stocks through their IRA. You could earn a higher return on an asset-backed strategy and additionally mitigate your risk across different asset classes.
Okay. Rodney Madison has joined us now. And so I don't know how much you've been listening, Rodney, or
just caught the tail end of Alden's perspective there.
Awesome. So I'm going to ask, where's a good place for people to learn about this? Is there a recommended book or a website to learn about some of the considerations?
Yeah, there is. I'm trying to remember the book that I actually started out with, and give me a second, I'll look it up. But
okay.
Like Alton said, there are a ton of custodians out there. But each custodian, they all pretty much do the same thing, right? But the only difference that I found is, like support, education, and then, fees. And so, you just got to be really careful on who you choose.
Yeah.
But let me see if I can find that book for you.
Yeah, no, every custodian's different at the end of the day. They're few and far between. Some are the cheaper ones, with less communication. Some are the more expensive ones with, a little bit more service, but you get what you pay for sometimes at the end of the day. But yeah, I found the Directed IRA YouTube. Nate Hare's been very vocal about, all areas of directing IRAs and HSA accounts and things of that nature, health and savings accounts. So would highly recommend, if anyone's looking for, some education content, to go view their Directed IRA YouTube. I don't know what the name is of the YouTube platform, but Nate Hare, Hare. And we just had him on the Mobile Mailbox Money podcast. Wealth of knowledge, that guy.
Okay, that's fabulous. I'll try to find a link for that.
Yeah, it's definitely, I think there's not a lot of education behind directing IRAs, and it's not as publicly available or people aren't even being really marketed to about it, because there's this such stronghold of the business behind, IRAs and directing those funds into stocks in order to make their fee. There's not a lot of influential individuals showing, hey, you can acquire a real estate asset, I like the note strategy because it's already a consummated cash flowing note. It's a performing note. There's not these complications or potential risk with a fix and flip hard money loan and them go bottom up, or it's a cash flowing performing note that has predictability in the monthly income stream and contractually agreed upon rate. Those are all big benefits when trying to do something more passive, right? And that's really what the self-directed IRA is really geared towards, is the passive investment strategy, longer term income stream that's predictable and able to capitalize on the compound ability of those IRA accounts. I think that there should be, definite more lives and things of that nature on IRAs. I'm not the most educated on, directing IRAs, but I've come into contact with a good amount of individuals that have expressed that want. They want to direct our IRAs and additionally diversify out in the market because they see what's going on. And to do that at a deferred strategy, highly slept on.
Greg, I just posted the link or the name of the book in the comments, The IRA Wealth Revolution.
Yeah.
IRA Strategies by Patrick Rice. That was the one that initially got me started in it. And any time that I do a deal with a private lender or somebody is considering loaning me money out of their self-directed IRA, I always buy that book for them and send that over to them.
Okay. Well,
so that way, that way they can really, because a lot of people don't really understand the benefits of it. Where you're like a traditional IRA, you can a self-directed IRA, you get the deduction of that year, based on your income and your filing status. But with the self-directed Roth IRA, you don't get to deduct that, but you get to do that early withdrawal and, like 59.5. And as long as you own it for 5 years and things like that. So, you have to know the differences between those two accounts on what you're trying to do. And then once again, that's where you have to speak with a financial planner, because everybody's situation is unique, where you have to speak with a financial planner, a CPA, or even an attorney, just to, set you up right. And you have these discussions on your long-term goals, because a lot of people, I think it's like 38% of Americans are not planning for retirement, right? Or 39% of Americans aren't planning for retirement. And this is one of the great benefits of investing within your self-directed IRA or your Roth self-directed IRA. And, and like Alton was saying, you have all these different vehicles. You have real estate, you have promissory notes, you have gold and silver. I just masterworks.com. I just recently, they created a fund, and I just recently purchased a percentage of a artwork piece, and they're offering high returns, and I bought that within my self-directed IRA. You have to diversify.
That. What was the art? Maybe you could just explain a little bit on that. That's just piqued my curiosity.
Yeah.
Well, and believe me, I am no way by means an art expert. So when you go to masterworks.com, you can look at the and then they have these advisors that you can speak with, and and they have aggressive returns or just very low returns, right? So the more aggressive the return, the investment, the higher your returns are going to be, and they would have these discussions with you. Yeah. And so I went for a pretty aggressive return. So if this thing sells, I'm going to get a pretty, or when this thing sells, I'm going to get a pretty decent return on my money. But once again, that old saying, don't invest with money that you're not prepared to lose. Yeah. Right. Yeah. So you always have to take that, into the back of your mind when you're investing in anything.
Yeah, that's many people don't realize that art can be a pretty good investment.
Right. Yeah. And like I said, I just recently did this probably about 3 or 4 months ago. And I bought 3 more pieces in addition, but they have not paid off. So I cannot tell you, where I sit. All I can tell you is the money that, I did invest, and hopefully, and that's the thing, they want you to hold on to these. They ask you how long you want your money out for, and they'll tell you, like the different art pieces. In this particular case, I'm going to have my money out 3 to 5 years, and then they'll eventually sell it, and then hopefully I'll get my return on my investment back.
I have an art story. Years ago, I drove from Vancouver to San Francisco to have lunch with a friend, and anyway, we're down by the pier there, and there's a high-end art gallery, and we wandered in there, and the guy, the salesman, just sort of, he looked at us, and I think he wrote us off, right? Because we didn't look like we were, but anyway, my friend Fiona says, I looked at something, a big print, and it says, I like that. That would look good on my wall, right? And no salesperson can let that slide. So anyway, so we're in the showroom, which is, lighting controlled, and you can change the background, and they put the print up, and the whole story is the author's 95. He's probably going to die in the next 2 years, and then and this is a bargain at $9,000 for a print, right? And anyway, so when we walk out, I said to Fiona, I said, you'd probably rather buy a car with that, wouldn't you?
Well, and a lot of this art, I mean, they're buying it in the millions, right?
Oh, yeah.
And then they sell it in the millions, and so they they set up a fund, and you're just buying a percentage of that fund. And so, like I said, I like diversification. I don't invest in the stock market. I tried, and every time I try, it always seems like I lose my money on it. So, I just gold and silver, promissory notes, and art, and I am a private lender, so I do loan money out. So, I do try to be diversified within my investments, and once again, that's why I love the self-directed IRA, just because it's tax deferred.
Yeah, I seem to have magic powers over the market. No matter what I buy, it goes down instantly.
That sounds like me.
Despite all good indicators.
Yep.
Definitely important to invest in less volatile, items when thinking about a long-term strategy, and that additional diversification, either in art or in raw materials, or, a flip or notes, that's all really important to spread your risk, across different strategies, but still have, your business acumen at the end of the day when evaluating these opportunities. And historically, like Larry said, the stock market's highly volatile. If you're not a true stocks guy, that may not be your avenue for an individual, and nothing's wrong with that by any means. There's all kinds of different avenues to direct your IRA. I've heard we can invest in art through a fund today. That was quite interesting.
Yeah, and I honestly, honest to God, I go back and forth with the stock market. I don't know enough about it, right? I don't know that, you have the blue chip stocks, I get that. But I go back and forth about actually hiring a financial planner specifically in the stock market, where I can just take, like, say, $25,000 and just say, here, let's see what you can do within the next year or two, 5 years, and so that way you can be diversified across these many different assets. Because honestly, I just don't know what I'm doing with the stocks. I know what I'm doing with real estate. I know what I'm doing with notes. So that's within my wheelhouse. I can control that.
And it's hard to know which financial planner or, who to go with at the end of the day. I mean, how many people do you know are financial planners and financial advisors? Probably a lot, or maybe not, depending on what market they're in. I know here in the Valley, Arizona, there's a lot of capital here, a lot going on. And I meet a lot of financial advisors and financial planners and dual role, individuals. But they're going to take a fee, at the end of the day, but, as they should, because they're trying to ultimately help you with your long-term goals.
Yep.
But, it's hard to find somebody. I attend Business Network International, which is a referral network marketing group. And that's where I find a lot of my contacts. Highly recommend BNI because they're held to a higher standard, opposed to just meet Joe Schmo, who you met at the coffee shop. This person's in a group. They meet weekly. They're held to a standard. They paid money to be in the group. So, definitely, if you're looking for someone like that, there's BNIs all over the country. And I'm sure there's a financial planner close to you in one of those groups. So that could be where you find one, a planner, attorney, or financial advisor. That's where you could possibly find someone like that that's reputable, opposed to going on Google or whatever,
Yeah, I'll tell you, another good place is your local real estate investment group, because I had a really good CPA that I've been using for years. From our local, this is when I was buying houses, 15, 20 years ago. And I've been using the CPA firm ever since, and this is a guy that buys and sells real estate, right? So he's practicing. He also buys notes. So, he's doing it, he's in and out in the trenches doing it. And, I just had really good success. Now I haven't found a financial planner for the stocks, at an investment, but I haven't really been looking either.
So, Dr. Ivan is in the house. Are you a heavy art investor, Dr. Ivan?
No, I have a unique perspective because before I got switched to real estate, I was heavily involved in stocks, mainly options, buying and selling options. And I could tell you from personal experience that most advisors are basically buying an index and charging you a fee for that. As far as the volatility is concerned, you have to be really dialed in to when the market goes up and down, and there's a specific trading strategies that can minimize your exposure to volatility, and you have to have a really strong stomach for that. I have a friend of mine who actually, before he became a dentist, I have two friends of mine. They were trained as a prop trader for a trading house. And these guys have stomachs of steel where they know they'll go into a position for X amount of time and exit it out no matter what happens. And I tried that for a lot of years. And when the volatility just got too much for me to handle, I just stopped. And I can say that the best thing that you can do is do what what's his name? The Oracle of Omaha. He just invests in the biggest company. He invests basically in businesses that don't lose money and make money, and that means the S&P 500 and the rest in treasuries, if that's what you want to do in stocks. Mm-hmm. But as far as trading is concerned, it is a art.
And one of the challenges is that the trends don't really become totally evident until they're in the rearview mirror.
Well, there are ways, but you have to look at a stock. You almost have to be clinical, medical when you look at a stock. You look at the trend, and what most really good traders do is that they don't have all these indicators on their charts. They have two or three indicators. And once the stock goes into that zone, either they're in or they're out. So, so those are my 2 cents.
Hey, Dr. Robin, that's funny because when towards the later end, when I was trying to do like the stock stuff, I had that, is it Thinkorswim?
Thinkorswim, yeah, tough.
Yeah, and so I was trying, my God, you're bringing like PTSD stuff back now. It's like, my Lord. But I remember ultimately trying to dial in on a Nicholas Darvis, the Darvis box theory. When you were talking about that box, and that he has this unique thing where he talks about when you see it within this box, when it breaks out of the box, or like for the negative, I think that's when you sell it. Like so many days of consistent whatever, and I forget what it is, but like I said, I was going down that road, and I'm like, this is just way too difficult. I'm just going to go back into doing my real estate stuff, and I hadn't looked back.
Yeah, what happens is that now with high speed trading, there are firms that'll actually go against your trade and make money off of your trade. Yeah. So that when I realized that, I said, this is not, this is really for big boys. I mean, and I was trading with the husband of a colleague of mine, and he was really, I knew one area of the market, he knew another area, so we had a synergy. And at the same time, we said, forget it. We can't deal with these algorithms because they're just killing us. And when before it was high speed trading, you can make some money. I could say that in 1999, I basically quadrupled my money in 3 months. And you think you're the hot stuff, but the market can humiliate you. You can lose money. What's the saying? You can lose money faster than some saying like that. Yeah. But the
all of those are great points.
Yeah, real true traders actually don't trade often. They're in and out maybe 1 or 2 hours. Actually,
Yep.
and I can go on and on. I actually had a neighbor who lived two houses behind me. He was a futures trader. He would trade from 9:30 in the morning to 11 o'clock.
Yeah.
And that was it. After that, he made his set amount of money, and he was done.
Yeah, and actually, most of the money can be made in the first 10 minutes. Yeah, if you have
cojones, yes.
Yeah, if you have cojones, yeah. Yeah. Anyway, I just put up on the on here. There's a book here which is quite entertaining, Market Wizards by Jack D. Swagger, and he interviewed a whole pile of people, and he'd ask a number of questions. Says, why do you trade? Why do you like doing that? One of the ones is, what's your best day? What's your worst day? And one of the fellows was a New York trader, and he says his worst day was he lost $12 million. And says, how long did that take? About 12 seconds.
Oh my God.
I realized my mistake, into second two. Says, but so what was your thing? It says, I got to get it back. He got most of it back, but he was dealing with probably $1 billion fund or something. But it's just, yeah. But there's also, as you were saying, I took a bunch of trading training, and that was the thing is, don't trade any more than 2 hours, because you get exhausted, you get tired, and even if you're ahead, you're probably going to lose it by making stupid trades. And I was good for stupid trades.
Yeah.
I had that down.
All of those make it really tough, I think, for a busy business professional who's making great money, whether it be a doctor or some physician or athlete or whatever, to try and mitigate your risk, in the stock market. You really got to be kind of aware of what's going on frequently. And if you're a busy business professional and you got great money, that's probably not the move for you, because of it's an election year. That may have a big effect on what's going on in the market. There's a lot of hazards out in the industry from not paying attention to your portfolio, or Elon Musk goes on the TV and says something crazy. Stuff happens at the end of the day. And I think that, we're all in notes here, the notecenter.com. Larry buys notes, the note experience, the note doctor. It's really directing your IRA into notes. And that's where we all see the highest level of non-stress in that program, predictability in the income, and the tax deferred strategy outside the stock market. If you're a stocks investor, no one's ever going to tell you to liquidate your entire portfolio and invest in a note. Diversify as you can, and don't overlook an opportunity just because you may not have the right pieces to the puzzle. You got a IRA wealth book right in front of you. You've got the stocks book that Greg just brought up. Nate with Directed IRA would be happy to have y'all view his channel, I'm sure, to get a little bit more in-depth knowledge. But man, to have that predictability when we're talking about I've lost money in stocks and options and blah, blah, blah. There's risk. There's real risk out in the market, and to be able to mitigate that, there's risk in every strategy, but with less levels of volatility, and that piggybacked with the tax deferred strategy, it's unbeaten.
Yeah, trading can be fun though.
Sure. Yeah, 100%.
But as a hobby.
Well, this is the thing that. What real traders say is that you don't treat it as a hobby. You have to treat it as a business.
Yeah. But you have to enjoy the game, right?
Yeah. When you treat it as a business, that's when you don't lose money. When you treat it as a hobby, you lose a lot of money.
Yeah. No, if you and the other, as you said, cojones, you can't. In the book, Jack Sway, there are many people. He has a list of things to do. Is like, if you're tired, if you need the money, there are all reasons, stay away from the computer if you're not in the right mindset, if you're going to be doing options trading or day trading.
Well, sure. And I think that personally, I love note investing, because in my opinion, it's just really one great ways to really hedge against inflation. right? Because right now
Yeah.
inflation is what, 3.3%. But if you go back to the old way of measuring it, it's way higher than 3.3%.
Way higher than that.
I can tell you for a fact it's way higher, right? Because we're all seeing it in everything, gas, food, whatever. And if you're getting these within these notes, like a 12, 15, 18% return on your money, I mean, you're 100% hedging against this inflation. And what better way to build up your self-directed, your retirement account than a self-directed IRA? Just have that passive money come in like clockwork. And unfortunately, I have one that, I bought and it was performing. Now it's turned non-performing. And unfortunately, I'm going to have to foreclose on it. But, it's one of those things, right? It happens.
Every strategy has risk at the end of the day. But what's great is you have the asset. It didn't just go
100%.
Yeah. In the worst case thing, you've got the property back.
Yeah.
Yep.
And that's the thing about stocks. If you're trading stocks, you have nothing. You just have a piece of paper. And most people that want to trade gold or silver, they trade the ETF. But actually, that ETF doesn't hold any of the actual silver or gold. It actually owns the certificates that hold those assets, and it's actually 1/10 of what they propose to have. Mm-hmm. And if everyone would cash out on those ETFs, they would go bankrupt. Okay, so you're really trading with nothing. You're trading with air. Yep. And that's what I like about notes. Like you said, Larry said that if your note went from performing to non-performing, guess what? You have a piece of property that you can take back and you can start the process all over again.
Yep.
I can tell you how many times my trades went to zero, where I lost all my money. I couldn't go back to TAS and say, hey, give me back my money. My trade went against me.
Yeah.
Yeah. And this one here, it's locally. And I bought it right. And, I hate foreclosing against anybody, but she's just burying her head in the sand. And if I do foreclose, we will still make a pretty good penny on this asset.
Yeah.
And that's the best thing about notes, because you've done all your calculations, your due diligence in the beginning, and you factored in against all the hopefully all the possibilities of things going wrong. But when it goes wrong, it can go so right for you in the end.
Right.
No, and there's additional risk mitigation too. You could buy a hypothecated note. Hypothecation provides, from that individual who's offering you that investment strategy, they are a vested partner in that note. So let's say you're less seasoned and you don't maybe have the exact concrete understanding of what happens if a note goes non-performing, and you invested through a directed IRA. You're really trying to be passive and mitigate your risk. You could buy a hypothecated note, and hypothecation means, let's say Larry has a note and he's offering a hypothecated note at a satisfactory return. He earns, say, 4% of the 14 and you earn 10, and he's a vested partner within that note. And you have someone that knows what they're doing. They have their cycled operations. If something goes non-performing, that provides great additional diversification for an individual that may be a business professional or whatever it may be, and they're really looking for a seasoned partner, quote unquote, within that note. Provides great risk mitigation additionally behind your due diligence on that same note, right? Could have been the same note, and you're like, man, I don't want to buy the whole note. I don't want the problems if that goes non-performing. You can do all kinds of due diligence, but stuff does go non-performing here and there. So hypothecation and directed IRAs.
Yeah, I just bought 2 partials within my self-directed IRA, and I tend to buy a lot. Well, I buy a lot of performing and non-performing within my self-directed IRA, but with the performing, I tend to buy a lot of the tail end of the notes. So I'm looking at anywhere between 5 to about 10 years left on a note, just because when you have that law of diminishing return on a amortization schedule, what is it, between 12 to 15 years where it starts tipping over, where you're paying more principal than you are interest.
Right.
So you have to be cognizant of that, especially if you're borrowing private funds, because you're going to get in the situation where if you're like the tail end of the note, if you're buying it and you're borrowing these funds, you may not have enough to pay that person back, or you're going to have to come out of pocket to pay that person back. So like I said, I typically buy the tail end of these notes within my self-directed IRA. And that's why, with this partial, it's a very low investment to value. So I absolutely love that.
Yeah, and for those that don't know, Larry's real big on partials.
Yeah,
maybe the partial king, for all I know.
I'm getting into them a lot lately.
But that's a great way. There's different ways to buy notes. People don't know that. That was a great nugget. If you're watching here today, that's a banger, low key. So there's little nuggets that are passing by here on this channel, and there's high value. People pay for education like that. So that's awesome. Definitely different ways to buy notes. You could buy the tail end. You could buy a hypothecated note. You could acquire a whole note. You could buy non-performing. You can buy performing. All of those have its own red tape at the end of the day. But they're, depending on an individual's needs and their skill set and their previous history, whether they were a real estate investor or stock investor, there's all different ways, to put that money into a risk mitigated strategy, whether it be a partial hypothecation or you take that additional risk and make the max delta value of your return. That's something, all of those are to be considered.
Yeah.
Mm-hmm.
Yeah, and I'll tell you another thing that you could do with them as well is if you want to broker them, arbitrage them. You can like these partials. I had several of my private investors reach out to me regarding those partials, and I could have easily made anywhere between $35 to about $4,500 on each one, right? Just because of the returns that they're looking for versus the return that I'm looking for. They were comfortable with the much lower yield to maturity.
Sure.
So you can arbitrage, and just not these partials, but just notes in general, where you can arbitrage those deals to other self-directed IRA owners that that they're looking to build up their portfolio. But if you do that, you have to make sure that you give them you do the due diligence, check the pay history, the servicing notes, order the BPOs, check the title, and make sure that it is a sound note that you're going to arbitrage. And the other thing that I would also suggest is when things do go wrong, and they will go wrong, you be that person, that front person, to where when they contact you, you 100% help them to fix it. Because they will just think the world of you. Just don't leave them.
If they don't know those processes, there's plenty of resources out there. I know Larry does some good education. I think it's free from what I've seen, as well as the Note Investor University. They have got a great platform, Patrick Franz and Desi Arnaz. So if you're looking for those, that checklist, if something goes non-performing, I'm sure that they would be happy to provide those at any time. I'm sure there's some other platforms out there. There's conferences, DME, Diversified Mortgage Expo, the Note Expo. We're actually talking about bringing an expo here for the note investment education, because there's not as much education. Paper Source fell off, Noteworthy fell off because of hard times, is what I'm hearing. And there's not much, to fulfill the requirement. People want to know what's going on and feel confident in their strategy. There's kind of some fall off. So this is a big live here today. If you're watching, this is wealth of knowledge being poured out. You may feel like you're drinking from a fire hose, but do those little due diligence. Read the IRA Wealth Revolutionary book. Go to Nate Hare's YouTube. Talk to Note Investor University. View Larry Hoffman's stuff. That's all very important to know what you're doing to additionally mitigate your risk and feel confident in a strategy. Who doesn't want to feel confident in a strategy at the end of the day?
Mm-hmm.
Yeah, and I can also just one more little thing, like if you do get into using your self-directed IRA, a lot of people don't know, like if you have an old 401k or IRA, you can roll that over into a self-directed IRA. So, but if you're currently employed, you can't roll your 401k over to it. You have to create a new one, and so you can 100% do that, and it's easy to do, and that's where the custodians will help you. And then where was I going with this? I totally forget. Oh, the other thing I was going to tell you is just whenever you do elect to buy a note, another piece of real estate, precious metals, art, whatever, when you do your direction of investments, please always make sure you stay on top of it, because something always seems like something is always missed, and always check in daily on that to make sure it's progressing.
Okay.
Because I had one where it's a well-known IRA, and things happened and it didn't fund within my self-directed IRA. I had to fund it personally.
Interesting.
And I funded it personally because I didn't want to lose that relationship with the servicer, and then also with the person that was selling the note.
Right.
So just always make sure you stay on top of things.
Oh, that's great. Anyway, following the fire hose comment, one of the things we were going to talk about would be trust, but maybe that's something for another week. How just in a quick summary, how would a trust fit in with this investment strategy, or does it?
Yeah, I buy notes in a trust. Typically what you do is just a land trust. I mean, I would buy my when I was buying houses, I would buy them in a land trust. And so just to I don't know if people know, people think that a land trust provides security, bulletproof against being sued, and it doesn't. All the trust does is just hides your the person that actually owns that asset. And that's where, an LLC creates that shield for you. And then, but number one is always doing the right thing, right? Just don't do anything shady, and you shouldn't have problems. But, people do sue people for the stupidest things. But yeah, like a land trust, essentially, when you buy it, I'll just buy it in, I usually typically do the name of the property, 1, 2, 3, 4, and then you could get with a land trust attorney to help you set all this documentation up. It's pretty simple. And I just typically buy it within the name of the asset, 1, 2, 3, 4 Main Street Land Trust. And then my beneficiary interest, that's another separate document that typically my attorney holds. And I name him, his company as the beneficiary interest, right? So my company, my name, my information is not on that. So when you go to the auditor's site or the recorder's site and you look up 1, 2, 3, 4 Main Street, you're going to see 1, 2, 3, 4 Main Street Trust. You're not going to find any other information regarding that. So it looks like, I just have, or that asset is in a trust, but you don't know that I own that asset and I own, 300 assets.
Right. Yeah. Provides additional security and some cloak to the business at the end of the day. Because if an individual is going to come and possibly bring litigation because of a specific note, you obviously don't want them to see your full tree, of investments, or be held personally liable. Those are all big things to account for. And having a trust, and maybe having a holding company out of Wyoming, that helps with additional cloak. Those are things, or Delaware, I've heard, is a great one. But those both have their little red tape of specifics.
With the Delaware and Wyoming, though, I thought there was a law that was just passed that it's no longer an anonymous LLC. So that's why I have my attorney as a registering agent.
And I've heard that. I think that was with FinCEN. I think that was in FinCEN, because they're trying to combat, money laundering and terror money. But I think they're in a lawsuit right now. I'll have to do some additional research. Sounds like on that.
I've heard that New Mexico also is a good state. Someone who has a trust in New Mexico, he says that he's been in business for 28 years, and he's had the Wyoming, he's had the Delaware, he's had the Nevada, and he settled on New Mexico. So I have to research that more, and then I'll give you some more information.
Yeah, and I just, I looked at the Wyoming, New Mexico, and Delaware, and honestly, I just go ahead and just choose to do business here in Ohio, just because that's where I'm based at, and it's just easier for me.
Long story short, talk to an attorney, right? Talk to an attorney that knows these laws. There are laws, and there are red tape between a cloaked LLC out of one of these states or a trust. You need to evaluate what's personally good for you individually and how your counsel may feel about that and move forward. But it's important to have counsel and make sure that your case specific situation is taken care of.
That's awesome.
How old did you say you are, Alden? Because you're speaking some
almost 30
knowledge.
So I'll be 30. Yeah, I'll be 30 this year. It's been a blessing, really, the past 10 years. Started with my father evaluating foreclosure homes when I was 16, trying not to get shot out here in Arizona. That's real deal. And going in homes as he's bidding on them at the courthouse. I had some other, food and beverage jobs and hospitality, bartending, big high service, high standard. And then in about 2018, started my transition into manufactured housing. So we were buying and flipping mobile homes, and that came with the wealth and knowledge of buying and flipping and rehab costs and material costs. And then as our success blossomed, we saw an opportunity in the market to start doing seller carry notes on the same homes that we had such a wealth of knowledge on. And through that came education and seek of, how to properly do things and seller carry and sell notes. So through our business of Win Mobile Homes, buying and selling manufactured housing here in Arizona, it's blossomed into mobile mailbox money and now Silvercrest Opportunity Fund. And that's where the knowledge came. It came from boots on the ground, running around, talking to the right people, getting in contact with ASREA, Arizona Real Estate Investors Association, having proper counsel when things may go wrong, and they do here and there. But those are all real important. You got to have your boots on the ground, get your knowledge of doing deals, whether that's doing cheaper deals and lower returns for less risk, to just kind of learn the ins and outs, or you're buying an education platform, or, so that's kind of how I've come to be pretty prolific, I think, in manufactured housing, low-cost homes in my specific market here in Arizona. But I'm coming to find out that there's not really very many people that are doing what we're doing in the large need of opportunity. So I'm excited to be here and to learn every day of the week. I'm 30. I haven't seen everything at the end of the day, but I got a great advisory board behind us. My father's my business partner, 30 years of real estate. And I love this business. I tell you, I love everything about it. I love this emotional satisfaction. I love the contractually agreed upon returns and income oriented investment strategy. Those are, bam, bam, bam. Those are the buzzwords.
Experience well earned.
Thank you, sir.
That's awesome. So, I think I was talking about mailbox money. I think almost all of you offer some investment opportunities for mailbox money. Do you want to just elaborate on that, Alden, and then Larry, and we'll end with that?
Absolutely. Yeah. So again, I'm Alden Guajardo with Mobile Mailbox Money and Silvercrest Opportunity Fund. We have two areas of opportunities here today for an investor who's wanting a risk mitigated strategy for contractually agreed upon returns. And that's either acquiring an entire note, right, through Mobile Mailbox Money as an unaccredited investor, and you participate in the higher returns for acquiring a whole note. And those notes go from anywhere from 50 to 150. And that's on diversification in manufactured housing, which is one of the largest needs in the country right now. It's a state of emergency for affordable home ownership. And then Silvercrest Opportunity Fund. So these are hypothecated notes for accredited investors wanting additional diversification and mitigation within their risk strategy to have a vested partner as Silvercrest Opportunity Fund on a tranche of about 1.5 million in notes, and those notes pay 10%, and they have a vested partner in a top 10 market outside residential real estate fluctuations in the stock market, and no longer having to worry about toilets and tenants. Investing in notes and having that income-oriented investment strategy, that is a $50,000 minimum. Feel free to go to silvercrestopportunity.com or mobilemailboxmoney.com, or call me direct at 602-888-CASH. Happy to be here today on the Note Center.
Yeah.
Big deal.
We'll have to add trees to that too, as somebody on the show a few weeks ago had to leave because a tree fell on his rental house.
Oh, no.
Anyway, Larry, you want to?
Yeah. I opened up. My name is Larry Hoffman. I'm the managing member of LGH Investments. I buy performing, non-performing first mortgages across the United States, and I create lucrative deals, offering my funding partners above average returns secured by a tangible asset, real estate. And, like I said, I think we all pretty much do the same thing. We buy notes at X amount, and then we try to, get private funders to come in and fund these and give them above average returns. And, basically what I do is anything below $250,000, I just do simple interest. $250,000, we do a straight JV deal. So that's where you're getting more of the very high rate of returns that, they range from anywhere from, 20 to about 38%, depending on the strategy on the non-performing versus the performing. So, like I was initially saying, I buy these notes there. I only buy first performing notes. I only single family. I do a few commercial deals. I do buy mobile homes not on leased land, but on land. And then I also buy land deals as well. So if you want any more information, just please feel free to, you can hit me up at larrybuysnotes.com, and, we can just have a conversation.
That's awesome. Dr. Ivan?
Well, I offer basically the same thing that Alden and Larry offer. So it's repeating. The only thing that our market is, we have more of a social component to our strategy. We're offering mobile homes to people that can't afford to buy a traditional house. And what this does, it provides them with a safe place, and they don't have neighbors to the side or on top or on the bottom. They have their own place for them to live. And these are working class people that have stable jobs, and we offer above average returns for our investors. And what we do is that we stand by behind our product. If a note or a borrower does not pay, we'll take over the note, and we'll be responsible for that note. So,
awesome.
So you can't do it with the stock market.
Yeah, I can't do it with the stock market.
100%.
Rodney?
Mm-hmm. Well, just like all before me, I'm a private investor looking for performing and non-performing notes all over the country, and providing great returns for a hypothecation partner.
Awesome. Well, thank you everyone for joining today. This has been very, as Alton said, there's a wealth of information provided today, and like every Saturday, and you can watch the replay in the LinkedIn link that you got, or YouTube, wherever you're watching this, and we'll provide some notes soon. So, all right. So thank you again for coming, and this has been great.
Happy
Thanks,
to be
Greg.
here. Thanks, guys.
All right.
Thanks, guys. Have a good weekend.
Take care, guys. Have a great weekend.
Yeah.
Bye.
Bye.